Welcome to another Coffee with Samso, where we got the part 4 of a special series that we're doing with Blackstone Minerals. We're here at the UWA Club here in Crawley at the University of Western Australia. I'm here with Andrew Strickland, who is the head of project development, and Andrew's going to be sharing with us his component, his part of the business chain of Blackstone. So welcome, Andrew. Welcome to Coffee with Samso.
Cool, thanks, Noel.
Look, Andrew, we've had a few chats with your counterparts in the business, and you're the fourth link to the chain, I guess, in some ways. Can you share with us, maybe just give an intro about who you are, your background, and your role?
Yeah, sure. My background is chemical engineering, extractive metallurgy. I studied at Curtin, and I did an MBA here at UWA, finished a few years ago. So as the head of project development, I sort of sit on the project side of the business, and really looking at developing the overall upstream and downstream projects in a way which optimises the overall value to Blackstone. I've spent most of my career working in project development for both owners and also for contractors. Most recently, I was at GR Engineering, working as a senior study manager. And previously, I've worked for the likes of South32 in their planning and development team, as well as Perseus in projects in Ghana and Cote d'Ivoire.
Okay. Look, I guess this the way the business is running, you're on the project development. So, give us the scope of what you're dealing with. I assume you're dealing with all the way through the process from exploration to the milling part of things. Is that correct?
Yeah. So I'm looking at basically not greenfield exploration, but once we've identified a target, typically through geophysics and early drilling, and we've identified that as a potential target to take through to a mining option, I pick it up at that stage. And then my responsibility takes us all the way through to the end of NCM for both the upstream and downstream processes.
Okay. So in terms of the business in Vietnam and where Blackstone is, obviously I always tell people that Blackstone is in that precarious sort of moment where before they go to the end product, where they can get very mixed up in messages and not heard of and misunderstood. I always tell people the difference between Blackstone's downstream story is that you've got your own ore. You can supply your own ore. You're not solely dependent on third party. Can you follow from that with your thoughts?
Yeah, absolutely. So our downstream business is really to supplement our upstream business. We are developing a downstream flow sheet focused around optimizing the value of what we have in our upstream ore. We've got focused on the Tarkwa nickel mine, which includes the nickel, cobalt, copper and PGE elements. And so as a result, we're looking at our downstream flow sheet to make sure that everything we do is synchronizing all the way back up into optimizing the value of every ton that comes out of that mine. We've then got our third-party feeds, which then come to supplement that and improve the overall balance for that process. So it's rather than something where we're not just looking at treating the third-party feeds, it's about how do we use those third-party feeds to maximize what we get out of our own mine.
A bit like a blending.
That's correct.
Yeah.
Blending. How do we blend to maximize the benefit of what we have in our mine?
From what you've seen, and obviously you've been looking at projects from the massive sulfides as well as this disseminated, a lot of people sort of don't have the great a hold on the understanding of the significance of one to the other. They just understand one is higher grade and one's sort of lower grade.
Yep.
But you also have the issue, the disseminate tend to be a bigger mass or bigger volume as opposed to the massive sulfide. Maybe give us your thoughts on that.
Yeah, so we've obviously got the Ban Phuc disseminated resource. So this is something we're still developing. It's just really like the key aspect of our overall development plan. This resource is large, multi-year mine life, lower grade, but still has good credits for things like the cobalt, for the copper, and also PGEs. We've then got our massive sulfides, and the massive sulfides are kind of really like the cream. They are high grade, high sulfur content with higher credits for some of these other byproducts as well. And we're really looking at how then these interplay between each other as ability for us to potentially delay the development for the disseminated sulfide, or is there a blending strategy where we can bring them together and optimize the feed to the overall, to optimize feed to the refinery with utilizing both the benefits of the massive sulfides and the disseminated sulfides.
Okay. And you know, you guys got a decent sized tenement holding, and when I was talking to Scott, there's always this thought that there is actually so much more there than what you can deal with at this point in time.
Yep.
Is that one of the critical points for you to look at in your role?
Absolutely. So we're in the middle of the PFS for the upstream at the moment, with Bounfoot basically being the cornerstone for that. But at the same time, we're also developing resources for Ban Chang, King Snake, Ta Kung, and Ban Kwa. So Ban Kwa being another disseminated feed, and the other three being all massive feeds. But these are the first four that we've looked at. We're still doing geophysics and exploration drilling in other targets, and I really see that these will be an incremental delivery of additional tons of this massive sulfide and disseminated sulfide over the realistically next 10 years. There's so much drilling there we need to do that we need to take our time and systematically identify the right targets for us and which ones will actually optimize our feed and bring them into the mine plan over time. And that will be a process of elimination, going through one at a time, identifying how big is it, what's the correct mining method for this particular ore body, and then how does that fit in our overall strategy.
How important is that planning? Because as you're talking to me and you're mentioning rolling those targets or the deposits out, I'm just thinking that you don't want to end up building your waste dump on top of your ore body, right?
Correct.
That kind of scenario. I'm not saying that is the case, but how important is that planning? Because if people, investors out there, can remember looking at your plan of your deposits, it's a fairly lengthy strike length, right?
Yep. Yeah, it's critical. I think that we need to quickly identify in the near field and directly, the areas adjacent where we may be putting any infrastructure, if there's any particular opportunities there. If there's not, then obviously we can sterilize that ground and plan that for our infrastructure. But that sequencing of when do we mine which target, what rate do we mine it at, do we blend, it's a really key step. And we're working with other consultants to help us through that. It's what's called enterprise optimization. It's about how do we maximize the value by the timing and the size of all these different options to create the best outcome for us.
Because it's really important, right? Because when you think about it, you got to know what you have. If it's too far away, which one to bring in first, and as Tony was talking, when you're in that process of cooking your end product, you don't want to end up where you says, hey, we could have done that, or we shouldn't have done that. We should have got these other ones in first.
Yep.
So, how much of your time is taken on that as opposed to the other important parts of your roles?
I guess at the moment it's probably about 30-40% of my time is really looking strategically about how we bring these together and what makes the most sense for us. Especially near term, we need to identify anything near Bounfoot so we can determine if there is potential for us to mine there or not. That's important so that we can plan our infrastructure. But also, to do this overall optimization process, we need to have a bit of a feel for, what's available? What's the mine design? What's the cut-off grade? How many tons? What's the strip ratio? Once we've got those sorts of key metrics in place, then we can see, then how do they fit together? And then the bits of the jigsaw start to fit together, and you sort of see really how it can come together.
I guess it's like you mentioned, strip ratios and things that adds to cost, and it could be really fantastic, great, but it might be too costly to go after that.
Yep.
And something else that's lesser but be cheaper and will work better, I guess, to the cooking process.
That's correct.
Yeah. Look, you've obviously worked in many sort of projects, and when you first came into Blackstone and you looked at this project, what's your thoughts in terms of, it's in Vietnam and it's a nickel sulfide, what did you immediately say, there's all these challenges that you need to do?
Yeah, I think that my first thought of the opportunity, the first thing I thought was, wow, what we've got here is unique, okay, in terms of a world-class asset, which with, potentially very long mine life, with ability to continue to explore and bring it. My first thought went straight to the opportunity. I'm a very keen supporter of the idea of moving away from fossil fuels in all mining aspects. And so when I saw we had the availability of this hydropower, I straight away thought, how can we look at this as a fully electric mine? There's not many locations in the world which have this great opportunity to use renewables on tap. Okay, so straight away we started looking at potential partners and how we can engage really in the electrification of the mining sector. And so we joined the Electric Mining Consortium earlier this year. As part of that, we're looking at how we can finalise and develop the open pit as a fully electrified mine. Obviously the challenges, working in Vietnam around the permitting, the approvals process, and that was really my first focus. The technical side I felt that we could handle, we could work with, and so I spent time straight away working with the team in Vietnam to get a greater understanding of what's required to get the permits in place to make sure then the projects team can support them every step of the way to make sure they have what they need when they need it.
And when we this sort of the ESG factor that everyone talks about, and sometimes it gets used in too early stage and just for show, right?
Yeah.
But when we talk about these kind of more challenging projects which are overseas and not in Australia, so that typical commentary is that, it's a bit tough there, jurisdiction and all this kind of. What was your thoughts on that when you first came into this project?
So specifically on the ESG space, it was really about how do we maximise what we're doing with consideration to what the community needs and with a minimum impact on the environment. So it's about every step of the way we need to look at what the alternatives are and looking at which will give the best outcome for both Blackstone and the community and the greater good. And that's, for example, been part of our strategy for waste dumps and tailings. We're currently investigating the option where, rather than creating a brand new disturbed area in an adjacent valley, how can we actually look at integrating our structure we're building through our waste dump to create a dry stack facility combined within our waste dump, so that we only have one impacted area, one impacted valley, and overall far less communities impacted by our development activities. And that's the sort of reasoning we need to consider at every step. How do we maximise outcomes for everybody, but also how do we do it in a cost-effective manner which is best for both shareholders, Blackstone, and our ability to develop and operate long term.
Is it fair comment to say, when I look at the previous speakers on the series, and their impact, obviously, the main person that is more directly into this question would be what Tony has to deal with, because it's very they're already confined to that space. For you to deal with all the other stuff, I think you're probably more impacted by how you should treat your ore, how you should dig it up,
Yep.
Your infrastructure to those places and things like that. That's a big, would it be fair to say that's a very, very big part of that whole making sure you're ESG compliant problem?
Yeah, it is. Understanding all the moving parts, where we can develop, what our options are, and we're at an early stage in a pre-feasibility study now. We still need to identify all those options as quick as we can, and then start to assess what those outcomes would look like once implemented, and in our decision-making process, use those inputs from a community impact, environmental impact perspective as well.
When we talk drilling in terms of in Vietnam,
Yep.
and obviously most drilling is expensive, but is it more expensive, more difficult in where you guys are?
I would say it's far less expensive. Our ability, our drill teams are exceptional on site. Their work ethic and their attention to detail is second to none, to the point where even our typical drill teams have been trained up to a level to be able to use our geotechnical drilling and doing geotechnical assessment for us.
Yeah.
So we're very happy with that, and the costs per metre are far lower than what we're achieving here, simply due to the fact that we have great local expertise, and also relatively lightweight and small rigs. A lot of what we'll be able to access is easily transportable, high productivity and high utilisation. So it's been very good.
Okay. And the culture of how you guys approach this. In the previous speakers, I was very, very surprised that it's actually, we use the term loosely, instilled in the DNA of the company, but I just felt that it was instilled in the DNA of the company. Like for you to deal with that, on day to day, and make sure you don't, like for example, could be a guy driving down the road and how you treat the road and how you build the road and things like that, and don't go ahead because there's more damage to the environment and things like that. What are your feelings towards that? I mean, is that culture instilled?
Absolutely. So, it comes back to even early strategy discussions we had in the company where these sorts of themes and these sorts of values came through in everybody very early on. I think the team feels that we have a responsibility to do things right. I think the question was put during that session. If we don't, who will? And why shouldn't everybody take this responsibility on? And regardless of their size or the size in the industry or what their background is, it is everybody's responsibility. And we took that on as that's how we're approaching this, and we need to do it because it's the right thing to do.
Now, on every investor's lips, going forward, like, what's the resource looking like? How is the growth? Is it something that's easily mineable? How do you answer those kind of thoughts that your typical investors would have?
Yeah, I think that, especially in that space, it's going to get a lot clearer over the coming months. So we're in the final stages of doing our PFS resource. So Optiro, they've been doing that for us, and that's looking very promising for us. And we'll hope to be able to put some more information about our resource in the coming few weeks, and that will hopefully give people a bit more of indication of where we're putting our effort. We've pretty much doubled the drilling in the Banfield resource in the last 12 months, to the point where we're looking to transition to a lot of pretty much mainly indicated resource with only maybe a small amount of inferred remaining. And similarly with Banchang and King Snake, we expect to be putting up maiden resources for both of these as well. And so from a resource side, that's great. But coming straight on the back of that is a mining study that we're looking at now. We've commenced early stages of that mining study, and that will really make up the bulk of what's coming into our upcoming PFS, which we'll be looking at. And we, I guess, compared to the scoping study, putting a lot more, meat on the bone regarding to mining fleet availability. What particular trucks are we using? We're claiming to be electric. What trucks are we using? How are we achieving that? Studies around our haulage studies and overall optimization work, which will start to show that we start to progress down this mining path a lot further to demonstrate what we are going to do in country.
So the implementation of the electric vehicles and the renewable energy for the mine site, is that part of you mentioned that's part of the feasibility as well?
Absolutely, yeah. So when we started off our pre-feasibility study, when meeting with mining consultants to help us with the work, we said this is our base case. We obviously need to have a diesel comparison, but this is not an alternate case that you put less effort into. This is our base case. We have to design it. The highlighted concerns are you need to, find fleet, you need to have details. And so from that day forward, we've reached out to several OEMs. We've entered an NDA with one OEM who can provide us a lot of detailed equipment specifications to allow us to do these mine designs.
How realistic is to have a mining fleet that's completely electric these days, or how far are we away from something realistic?
I think that we are on the cusp being able to demonstrate that it is absolutely going to happen in this decade. So I know of 3 other projects in Australia which have very similar goals to us, and I expect that there will probably be at least one DFS come out in the next 3 to 6 months, which will demonstrate a fully electrified mining fleet. If not electrified, it'll be a hybrid. And so I don't believe the future is black and white. I think there'll be a hybrid setup where you will be looking at hydrogen, possibly ammonia fleet, as well as a mixed fleet with battery electric as well.
I guess, realistically it's more of a transition stage to get to that mecca of full electric.
Yeah, that's correct.
So there's a path that we need to travel.
And Blackstone as a startup where we don't have set up infrastructure for a diesel fleet. So why would we establish it knowing that when we want to start this line up, we're going to be in the middle of this decade, and it's going to be when this sorts of infrastructure and equipment will be available. So our argument from day one has been, no, we're not going to start it with a diesel basis, because if we do that, my experience in projects is once you've done a DFS, that's what you're doing. You know, and so we need to make sure that when we enter that DFS, we're based on an electric fleet. Otherwise, it will be electric. Diesel is okay, and electric is an upside case. It may never come.
Yeah, I guess once you're there, it's don't fix it unless it's broken.
Yeah, that's right.
If it works, leave it be.
Yep.
And I think that's the scenario. Look, in terms of what your role is in the company, there's that part where you are getting it all in and you're into that, cooking, chemical stage and processing. How much different is that to, say, the other ones that's out there? Is there any super or different methods that you guys are doing that maybe give you that advantage?
I think on the upstream side, processing, I think we've got opportunity to. Obviously, the electric fleet is going to be really interesting because current operating cost for electric fleet is different to a diesel fleet. The basis is power is cheaper. So if we have very cheap power, the marginal cut-off grade for our tonnes is less, but we have higher upfront capital as a result. A lot of that upfront capital in comparison is typically around renewable power generation and storage. So if you're looking at wind power, solar power, and batteries, but we don't need that, given the fact that we have renewable power on the grid. So a lot of that upfront capital is removed, and so we still have the benefit of the lower long-term operating costs due to these trucks.
When you talked before, there's going to be a transition stage from, to that full electric fleet. For us layperson out there, we're thinking, well, there's already electric cars out there.
Yep.
What's the difference between putting into a four-wheel drive or a truck?
Yep.
Maybe get your comments on that.
Yeah, I guess the main difference is size, and so obviously electric cars, everything's about range in electric cars, and range is really based on load, aerodynamics, and lift, and how much you actually have to lift them. So obviously, with a mining truck, aerodynamics is not there, but it's nor is it at a speed really that matters. Okay, but you have load. You have a very heavy vehicle. It needs to be built to a level which can withstand the rigors of mining operation. It needs to carry upwards of 100 tons, of payload, and then you need to also have a battery, which has long range. But then that also has to accelerate that truck quickly up an incline to get out of a pit or out of a decline. So there's a lot of factors where it's a very complex scenario where you need to try and optimize where you can design a truck. But there's more work coming out where do we need to have a truck which has a 600 kilometre range like you do a car? Where trucks run on regular paths, and so we're looking to incorporate other technologies, which will be like trolley assist, which is kind of like a mobile charging system where we can connect to a system, and while it's on a battery, but it's still getting power from the grid while it's coming up your ramp. So as a result, you're not consuming your battery. The only time it's on battery is on the short trips when it's not able to. And like cars, downhill and braking, you're also regenerating power. So how do we design our ramps to maximise the regenerative potential, as well as minimising haul when you're not regenerating ore on a trolley system?
When you put it that way, that path to electrification seems more realistic, or when I'm listening to you say, right? Is that sort of a path you guys would be thinking, hey, this is the way to go, as opposed to waiting for a new build truck that's fully electrified?
Absolutely. So the plan for the PFS will be a electric fleet, but with incorporation of some assist, so dynamic charging systems where the vehicle's in motion and it's charging at the same time. It's also about planning where our waste dumps go in a way to maximise the downhill charge, or again dynamic charging on a common rail system going out to the waste dumps to minimise the amount of time things are off charge.
Like a tram, I guess.
Yeah, it is. even maybe a better comparison is like the smart freeways in Europe, so where we're basically keeping things on charge for a longer period of time.
Yeah. Okay. Now, going forward, I guess, when people are thinking, okay, look, this is I call it the boring stage of the company's journey. What are the things that people could be thinking they're going to get, or, what kind of news flow will potentially come?
I think so. The most exciting news flow, I think, is going to be resource and mine plan. I think that there's some really exciting things happening in that space. We're looking at optimising our cut-off grade to figure out where the right numbers are for us. But then also, what really hasn't been really communicated yet is our byproducts. We're looking to develop our byproduct news flow, especially around completion of studies for our PGEs, for our other byproducts, and make sure that we have supporting information for this PFS. And I think that's going to be really interesting. I think the overall input and the potential of blending is really exciting. We're continuing to investigate that further now. I think that we can hopefully come up showing some really good results for band chain king snake as these coming forward as potential resources and inventories for our mine.
Actually, one of the things that we haven't really talked about was what is the potential of credits that will make your process cheaper, the input credits and things like that, from your byproducts.
So this really ties into the work that Tony discussed with respect to the downstream refinery. So we're not like a conventional concentrate seller where we get credits. If we want credit for it, we need to refine it, make it in our refinery. Yeah. So to that end, we have included in the current PFS copper. So copper is a clear understanding. Yes, we're going to have copper in our feed. And so we included copper SXEW as a stage in our flow sheet to recover that copper and have a payable element for it. In a similar vein, cobalt. The cobalt comes into our final product anyway, so we're getting the credit for that in our final product. PGEs are the next one. So PGEs and gold, where we've completed a preliminary study with PGEs. We're looking at some more test work now to firm up the overall circuit design, and we'll look to bring that into this updated PFS later this year.
Okay. And I guess on most people's lips is that when we talk about all your copper and cobalt and things like that coming into the play, would that definitely put you guys on a better footing than if they weren't there in terms of?
Absolutely, yeah.
Yeah.
So it's not going to double the value of the project, but in terms of offsetting processing costs for the refinery, absolutely makes things easier for us, and also it helps to I think give other revenue sources, which is dealing also from the main NCM product as well.
So on the other side of the question, I guess, is are there anything that will create the headache for you guys to get things done in terms of chemically?
To be honest, not really. Like the basis of our flow sheet is to try and be flexible, and so we are trying to. For example, like I mentioned the copper, the copper circuit is designed to allow us to take a greater range of concentrates in our feed so we can deal with that copper output. So we actually are we're investigating our sources. So for example, people highlight issue of cobalt supply, especially in the battery market. Can we look at alternate sources of cobalt, which are maybe intermediate cobalt, not necessarily going all the way to cobalt sulfate, and have them as feeds into our flow sheet at different points, and what does that mean for our overall costs? And so we're looking at options like that to try and really improve that flexibility. There's nothing that really concerns me. It's just that we just need to make sure that we have the circuit flexibility the flexibility to be able to take these feeds and these different elements.
What advantage would is there, or have that your partners who are saying, hey, we want your product, go do it? How much input are they putting into your department or other people's department where say, maybe that you go, hey, thanks for that. That'll make things a lot easier because that input from them.
Yeah, well, obviously the next key stage of our project is the downstream DFS and piloting process. And so some of these partners are providing concentrates for us to test through that process, and so we can confirm and blend that with the material to demonstrate it. But that also then flows back up the chain for them. Are they getting more performance information? So if they're going to come apart, what does that mean for them? You know, how does that allow them to re-optimize their pits or their underground mines to deliver different material without the same constraints that they previously had? And so that there's a value add there, you know, for them to come and join us, because they're seeing the fact that, well, if we're not constrained by MGO the same way, you know, what does that suddenly mean for us now in terms of our resource and reserves?
And on the retail, I call it the retail side, you know, the guys who are using your products to make the batteries and all that, are they helping out with any sort of info of how you could do your job better? You know, not say to tell you to do your job, but
no, absolutely. I know what you're saying. So there's a lot of IP, you know, in the final stage of the project. We have RP that we're developing, which is fine, but also other potential partners who take RP CAM and turn it into the CAM material will have their own ways of doing it. And so depending on final partnerships, we may be bringing in other people's technology as part of that, depending on the final structures that we have. So absolutely, that's on the table. We're looking at some of these people we're speaking to, they've spoken about it. The next step from the CAM is also then, you know, the alignment with the OEMs, you know, and what do they require in their batteries, and that stage is a key aspect of what we're doing in our piloting process, as well as how do we align our products with what they require long term to make sure that their performance is as expected, and when they sell their eventual car, bus, bike, whatever it is, to the consumer, they get the performance they expect.
Okay. Look, it's fantastic. I mean, it's good to speak to the person that's actually doing it and get that kind of feedback from yourself. Is there anything that you would say to the viewers there that we haven't touched on today?
I still think that the greatest opportunity right now is for the unlocking of value in assets. You know, we have the ability through our flow sheet to work with people who have unlocked assets and help them develop their assets to the point where we are unlocking the real flow sheet around the pyrometallurgical flow sheet, which has limitation to arsenic and MgO and iron ratios. We are unlocking those constraints, and so how does that then change the overall development plan for some of these other assets out there, which have so far been real unviable because of an MgO issue or an arsenic issue? You know, what does that look like long term, and how much nickel does that actually bring to the table?
I mean, look, you know, nickel I think there's the demand and the use of nickel has not yet to be fully realised. I think in the pricing may change in time to come.
I think it will.
Yeah, I think a lot of I tell people a lot that, you know, in our industry for once. In my 30-odd years of experience, I think it looks like the ducks are finally lining up properly for us, you know, in terms of market and technology and the shift to, you know, an electrical world, I guess, or non-fossil fuel world, if you can put it that way.
Yeah, I think that the carbon-free underground mine is within touching distance. You know, it is very young, and with the work of the Electric Mining Consortium, there's fast pace in that area. You've seen, you know, with some of the works happening with Oz Minerals, with their recent crowdsourced challenge they've come out with, and also with Rio Tinto and BHP with their Charge On challenge. Is now the shift is starting to change a little bit also to the bigger scale, to the open pits, and people are starting to get excited about, well, what can we actually do for open pit trucks, and that's, I reckon, the next real phase of development we'll see.
Okay, Andrew, thank you. Fantastic to get. You know, it's really. I think you know when I came up with this thought of having a conversation with, you know, all the components of Blackstone, I must sincerely say I never envisaged how well it's come out in terms of, you know, the feedback that you guys are sharing with us.
Yeah.
So guys, look, again, at this point in time, I always say reach out to these guys. They're the guys that are doing it. They've got all the answers. So definitely, you know, send an email to Andrew and give him more work to do and things like that. But Andrew, thank you for your time, and
Thank you.
really appreciate it, and hopefully we can do something similar when you guys get to the next stage.
Absolutely.
All right, thank you.
Great.